Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 3rd, 2018, and tonight I'm going to take a look at the Australian dollar, the ETF being FXA. The trends are all pointing to the downside. It's been pretty strong to the downside as well, and the technical rating is still negative as well. Nothing is showing up here as far as oversold conditions where it's starting to reverse, but we do have some patterns that have just started to crop up here. Here's Australian dollar. We had a doubt low just recently, and with today's action we had a stretch low, which is an important one, and a pulse low, which also is important. So when we take a look at the market as a whole, here are daily bars for Australian dollar. You can definitely see the downtrend here. And the support to the market, if I come all the way over here to this support and go straight across, that's hitting these lows right through here. And we're kind of stuck between two different levels of support. One actually acting as support, this one right here, and then we have this resistance one that's acting on the high side. So you can see some major bars hitting the low to the high to the low to the high, all taking place here. So we're starting to at least build out a bit of a consolidation, if you will, and at the same time we're stuck between these support and resistance levels, and because we're starting to see some pro alerts on the reversal side, maybe, just maybe, this is the end of this this bearish trend that we've been underway. As a minimum, it should give it some life where we have some form of consolidation. So the way that the systems are playing this out right now is that kind of no surprise here, because this is what happens when the markets come down after a nice little trend. We have a recent short today, but combine that with two longs, a short and a long. Net, we have a short, a long, a short, a long. So we're positive one long position. So what I would suspect that we're going to see, despite the fact that we just had a short that triggered here today, that we're going to start to see maybe a building out of this support, and the systems are independently, they're not confused because each system is doing exactly what it's supposed to be doing. The portfolio as a whole is a little confused because we have different components coming in. There's not a lot of continuity to what we're doing with a long system and a short system triggering simultaneously here. That net we are long the contracts, but I think that we're going to be building this thing out for a little bit, and as we build out, if I come back to the screen here, as we start to build out this this level that we're at with the resistance and the support, that in time it will dictate whether or not it's going to hold and we're going to head higher, or it's going to break and we're going to go lower. The system's obviously right now with the way that we're triggered, it's net long one contract, expecting things to head a little bit higher. But I think that because we're at this in-between stage, I would just simply caution you that if you're trading the Australian dollar, beware that that there's opportunity here, but you have to be a little bit nimble. I just want to show this. These are the patterns. It's hard to see here because there's the green dot and there's something that's going on underneath it as well. So we have a pulse low and we've got a stretch low, and so both of those triggered here today. So just the fact that we've got kind of wide bars here building out this little base, that I would suspect that we're going to see things kind of hold and start to head higher. So the numbers that you're going to want to watch, here's the resistance level. It's 74.34, this on the Australian dollar and the September contract, and then on the low side it's 73.11 for the support. So those are the two levels that you're going to want to watch, and when you do watch those levels, it's a closing bar above it or below it that you're really looking for. It's not just a low below it or a high above it. You're really looking for a closing above those that level or close below the lower level that I was just quoting to you. I'll add that onto the page so you can see those numbers. But just simply watch the Australian dollar. We're in a consolidation type period. It could go on for a little bit longer here. Certainly need a little bit of a consolidation for some of the moving averages and some of the trends to really start to base here a little bit. So this is just an early warning, and as you can tell from the system side, with the combination of the longs and the shorts together, there's a little bit of confusion that's out there. But the reason I'm showing this market is because it really shows the advantages of systematic trading. An individual's not going to be able to rationalize different time frames and be able to say, well, on this I'd be long, in this time frame I'd be short, and with this type of a pattern-based system I'd be short, and with a trend-based I might be short, and another momentum I might be long. This is where it gets confusing for an individual, but this falls right into place with what a system and a strategy of systems, a portfolio systems, can really handle. So net with everything that's taking place, a little bit of confusion, but it's still net long, and we've got a number of positions that are out there. Let's see what happens with the Australian dollar. Kind of a fun market to trade, and we will take a look at another market here later in the week. Thanks so much.